And I'm very honored to be able to present James Mwangi, the CEO of Equity Bank, and ask him to tell us about his success story and highlight what he sees as the investment opportunities that exist both within Equity Bank Group and how investors can participate successfully in the growth of the company going forward, and any other messages that need to be told to the private sector and to our friends in the public sector. James.
Thank you very much. In terms of success, let me frame it in two perspectives. In terms of impact as a bank, and two, as an investment opportunity for investors, because in the house we have very good investor. Let me acknowledge from the onset an anchor investor, Richard, NSSF from Uganda, among others in the room. But basically, Equity turned from a microfinance organization, a building society, 10 years ago, 2005, and became a bank then. 2006, listed in Nairobi Stock Exchange and started, and that is the opportunity that it created to give the investing community a chance to participate. But prior to that, two opportunities arose. The first one was Africa, the first dedicated microfinance fund for Africa based in Senegal. And Equity became the first investee in the year 2002. They exited 2006, and I guess for every dollar that they had invested, they got $80 back. It was the most rewarding investment. Then the second opportunity came after listing 2007. We really needed capital to expand. We did a term sheet globally, and eventually Helios won the bid. And they made an investment of 185 million. Those who remember, it was on the eve of the global financial crisis and Kenya's political post-election crisis of 2007. So essentially, those two combined to make it very tough to create a return. But I'm happy to say the $185 million, Helios exited the last 3 months. That's a value of nearly $500 million in 7 years. And essentially, two things were proven by Helios, that you can invest and exit out of Africa seamlessly without hanging effect on a stock, because during that period, during the year, Equity appreciated by 30% in terms of value. So when you have 500 million exit from a Nairobi Stock Exchange, it reflects liquidity. There is liquidity. There is good investors willing to take up new stock. What is the, going forward, what is the opportunity for Equity Bank? Equity Bank has been the greatest beneficiary of those two significant investments. In 2007, when we rang the bell in Nairobi Stock Exchange, the market cap of Equity was just 4.6 billion Kenya shillings. If you use today's exchange rate, you divide it by 100. Today, Equity is nearly 170 billion. Just before the erosion, it was slightly over $2 billion US. So yes, the equity funds made a great return, but the organization itself grew by almost 100 times within a very short time. From a balance sheet of 20 billion when Helios invested to a balance sheet in excess of 420 billion Kenya shillings, or $4 billion US. And now with the presence in 6 countries, Kenya, Uganda, South Sudan, Tanzania, Rwanda, and DRC Congo. So, and the customer base increasing to over 10 million customers, making it the largest bank in terms of customer base in Africa. And in Nairobi Stock Exchange, the biggest bank in terms of market capitalization. So both the bank won, and the investors continued to grow. Impact on, while Equity started as a microfinance bank 10 years ago, it's now maybe arguably the biggest SME bank in Africa. 70% of the asset base is in the SMEs segment, helping a lot of people to create wealth, creating a generation of local businesses that are becoming regional and essentially helping to grow the economy. When we did the last tally of how many people are employed by Equity Bank customers, we then to about 800,000 employment within the customer base. Equity itself has employed 9,000 professional bankers. So essentially, you could see the contribution to the economy. But lastly, as I close, because I had only 5 minutes, which I'm now on the fringes of being edged out by Barbara, is the innovation Equity has brought into the market. As people say, Equity has democratized banking in the East African region and made it possible for masses. When we started off, nearly as a microfinance 20 years ago, only 4% of the Kenyan population had a bank account. That number has grown to 57%, with Equity having half of all the customers in Kenya. So you could see the significant contribution to the economy in one aspect or the other. Second aspect of it is redefining philanthropy. Equity offered its infrastructure to do good. So teaming up with the foundations and development institutions, Equity has used its infrastructure to convert 500,000 peasant farmers into agribusinesses. It has 10,377 orphans in secondary schools on scholarships, and has 265 bright Kenyans in Ivy League schools in the US, creating the next generation of leaders. So our success is not about purely money. It's good to reward shareholders, but it's transforming an economy and impacting in what we call shared prosperity within an ecosystem. It's bringing everybody on board and taking pride that you can redefine. Two great innovations it has brought. The first one is agency banking. In addition to 270 branches, Equity has 20,000 agents who represent it in every shopping center. So the banking bridge the last mile when the shopkeeper is the one who takes deposits and manages withdrawals and originate loans and also originate insurance policies. So essentially, that's the biggest contribution of really making financial products accessible. The second last one is we all have enjoyed internet banking for many years. Converting the Fisher phones is old Nokia 100, into almost smartphones by installing them in a SIM card that has a banking software. And essentially, getting every customer to have a banking platform that compares with internet banking, but on an ordinary Fisher phone. So those are contributions that the world is speaking. And lastly is lobbying globally. I sit on both the advisory board in Kenya on financial sector, chairman of Kenya Vision 2030, advisory board of IFC on SME, the G8 and the G20, specifically on inclusive banking. So that is in a total sum what we could call the success of Equity Bank. Shareholders who have been there for 15 years, each of them out of one share, out of splits and bonuses, they have 600 shares. And the 600 shares, the value has gone 30,150 times. So that is a measure of Equity success. Thank you, Bob.
I mean, it's astounding. It is truly astounding. And, you know, as Elizabeth from the head of OPIC said yesterday, in many political circles, we have a problem where the public sector doesn't trust the private sector. I think we have to bring James in all those cases to help us with the divide. It's just breathtaking, the scope of what you've done. And I think Africa and the world thanks you for that. Thank you.
Doing business in Africa. You can't afford to be without Africa Investor.